to our webinar today, which is part one of our Festive Payroll series. My name is Sarah, and as you can see, I'm joined by Duncan. Now, Duncan will be back a little bit later on. So I'll be starting us off with a section on managing seasonal staff, so specifically how to handle payroll for temporary employees and what to consider. Then Duncan will walk through a couple of key scenarios around paying employees during the festive season, so best practices for running payroll early and handling advance pay as well. And then finally, I'll return at the end just to cover processing any extra payments. So we'll look at handling bonus payments, standard pay elements, and net bonuses as well. So that's what we've got in store for our festive webinar today. So let's get things started and dive into our first section, which is all about taking on seasonal staff. Now, at this time of year, it is really common to bring in a little bit of extra help for the festive period. So maybe for a few weeks or months while things are a little bit busier. And while most payroll tasks will feel exactly the same as usual, we did want to dedicate a little section to seasonal workers because there are a few scenarios and a few considerations worth highlighting for this one. Good news is Sage 50 Payroll will make it really simple to manage seasonal employees. And there are three key things that you want to keep in mind. So first is adding new starters. So this is all about creating the employee record in your payroll. And you can do this in two different ways. So you can do it through the employee wizard, and that will walk you through the process step by step. And then you'll enter all of the starter details as you go along. But then there's also quick employee as well. So that's a one-page option for entering just the essential information in a quicker way. Now, which method you choose is up to you, but if you want a little bit more detail on both options, we do have a recorded webinar called New Starters, and it does cover those in a lot more depth as well, so make sure to check that out if you haven't already. I will also show you where these options are a little bit later on in the demo. Now, second thing to consider is automatic enrolment. So this is quite a big one. So if your seasonal employees meet the criteria, so age, earnings, and their UK worker status, they'd usually be automatically enrolled into the workplace pension scheme. But for short-term staff, so for seasonal employees, you can postpone automatic enrolment for up to 3 months. So if you're using the Sage 50 Payroll Pensions module, when you add the new starter, you do want to leave the pension scheme blank when adding that. And then when you run the pension assessment, you can then apply the postponement. Now, if you don't use the module, don't worry. You can still postpone in the employee record under the pensions tab by entering a postponement expiry date as well. So it doesn't matter which way you do it, would have this exactly the same thing. Now, just remember, once postponement does end, so if they're maybe only working for you for a month or so, the 3 months will be more than enough to cover that. But if they are still employed by the end of that 3-month window, if the employee still meets that eligibility criteria, they will need to be enrolled at that point. So do remember with that one, you can only postpone them once. And then third thing to consider is processing leavers. So when their employment ends with you, you'll process their final payment as you usually would. You'd mark them as a leaver and then produce the P45 and send those details over to HMRC as well. So I will show you where some of these options are in the demo shortly. And don't forget, you can download the handouts, and there is some more detailed guidance just at the bottom of the handouts there. So that is the standard approach. So add them as a new starter, postpone enrolment if needed, process them as normal, and then once their employment is up, mark them as a leaver. So that would be your 3 key steps in a nutshell. But there is another way to handle seasonal workers, and some of you might already be a little bit familiar with it, so we'll look at that next. So that is actually by using the on hold status in the employee record. Now, this option is perfect for irregular workers, so people who aren't paid every period, or those who come back regularly. So if they maybe work for you every Christmas, this would be a great option. So every summer, every Christmas, if they come back during busy seasons, then this is going to be a good option for you. So here's a little bit on how it works. So you set the employee's status to on hold during the periods where they're not working. Then when they return, you simply reactivate them. The big advantage to this, you don't have to create a new employee record for them every time they resume work. And you don't need to process them as a leaver every time either. So just save you a lot of time there. And it just helps you out not having multiple records for the same person if they are going to come back and work regularly. So let's go ahead and dive into our first demo today and see exactly how this works in Sage 50 Payroll. So I'm just going to bring those slides down. So I do want to kick things off by just showing you a couple of the things that we've just talked about. So first thing that we talked about to consider for seasonal workers was adding new starters. So when it comes to adding a new starter, you can find both options in the employee section. And here we have the employee wizard, which lets you work through step by step and fill in the details from there. And again, any compulsory fields will be marked with an asterisk. So those are the fields that you will need to fill out before it'll let you move on to the next section. Now, just below that, we have the quick employee option. And you can see here, this is a bit of a simpler format. It's just a one-page form for entering the essential information quickly. So again, the compulsory fields will be marked with an asterisk. And once you click save, the record will then be created. So two different ways of doing it. Whichever way that you do it really doesn't matter. It will do the same thing. It is just whatever you prefer. Now, I've already added my seasonal worker ahead of today's webinar. So that's Nicholas Saint, and he'll be with us until January. So bearing that in mind, the second thing to keep in mind is postponement for the pensions. Now, because I use the pensions module in Payroll, if I just double check Nicholas's record, I'm going to go along to the pensions tab. You can see when I've set Nicholas up, I haven't actually put a pension scheme in here. So I've left the scheme blank. And the reason for that is because when I then go in to run the pension assessment here, if Nicholas is eligible, it will auto-enroll him, and then I can apply the postponement from that window. Now, if you don't use the pensions module, don't worry. Like I mentioned earlier, you can still postpone from the pension section of the employee record, so can still postpone both ways. So that's my new starter added, and I've taken in consideration the postponement. And then the last thing that we looked at was processing leavers. So when Nicholas actually finishes in January, I'll highlight the employee and I can use the leaver wizard. So I can either do that from the employee section. See, I've got the leaver option on the left-hand side here, or you can do it from the employee record directly as well, just down here. And that will be in January when Nicholas finishes his temporary work. Then I will process him as a leaver, produce the P45 and send the FPS to HMRC. So those three steps, just remember for seasonal employees, the key three steps is adding them as a starter, postponing pensions if needed, and then processing them as a leaver when they finish the temporary work with yourselves. Now, I do want to look at another scenario. In my employee list, I've got Frank. and he is an irregular worker. So Frank comes to work for us during busy periods like summer and Christmas. And as you can see, Frank has been on hold for a few months, but they have actually came back to do some work. So I actually need to take them off hold because I'm going to process a payment for them this period. Now, you'll notice if I go into payroll, whilst Frank is still on hold, if I try to enter payments for this person, I will get an error message. And that's just because he is still on hold, so it will automatically exclude them from the pay run. Now, to reactivate Frank's record, what I want to do is I just want to double click, go into Frank's employee record. I'll just go into Frank there. I want to look at the employment tab. So if we look down the left-hand side, you'll see Frank's status is still set to on hold. So I'm just going to change that back to OK, and then click Save. And now, when I go to enter payments for Frank, see that will load as expected. So no error messages like that first time round. So that's Frank taken off hold, ready to be paid and included in my payroll as normal. So that on hold option is a great option if you have employees who don't get paid every period, but return regularly. So it's just saving me from creating new records or having to keep processing them as leavers as well. They'll just simply go on hold until they come back. So I do want to pop back to the slides and do a quick recap. So remember, when an irregular employee is due payment for seasonal work, all you need to do is change their status from on hold back to OK in the employee record. And then it is just a case of processing the pay as normal, including sending the FPS. And the FPS will notify HMRC that they're no longer on hold and they've now received payment from yourselves. Now, a couple other things just to keep in mind with irregular employees. If someone on hold has actually left your company, you do still need to process them as a leaver. So you don't want to keep them on hold. Now, there are a few different scenarios depending on whether they've been paid in the current tax year, whether they're due a final payment. So I won't be able to demo each of these scenarios today, but I have linked a detailed guide in the handout, and that explains exactly what to do in each scenario. So it's just this guide here. I'll just get that up on screen so you can have a little look at the different scenarios. So you can see there's a few different next steps on there, dependent on when they've last been paid and when they're actually leaving as well. So that is how to deal with seasonal staff. Now, what I'm going to do is let's move on to the next section, and I'm going to hand it over to Duncan now, who will now move on to running your festive pay run.
Thank you very much, Sarah. So you've just seen there how to deal with your seasonal staff. So we're now going to take a look at some practical considerations when it comes to actually processing your payroll during this period of the year. And the first thing I want to touch on, and I've seen a question on this already in the Q&A, is paying your employees early. Now, with Christmas landing towards the end of December, it is likely that some employers will choose to pay their employees earlier than the usual pay date. And this could be due to the pay date landing on a bank holiday, or it could just be that you want to pay your staff a little earlier so they have access to their funds in the run-up to Christmas. Now, there is an important rule when it comes to reporting this to HMRC. There is a permanent easement in the requirement of reporting the actual pay date in this scenario. So this is kind of like an exception to the usual rule. But HMRC's guidance is that you must still report your normal or contractual pay date on your full payment submission. So bringing that to life with an example, if you would usually pay your staff on the 25th of the month, but in December, you've agreed to pay them on the Friday before that, on the 19th of December, when you come to process and report your payroll to HMRC, you would still set your process date to the 25th of December in this example. You would process your payroll showing that pay date, and that would be reported in your full payment submission. Now, when it comes to paying your staff, you'll need to pay them on the date you've agreed. So if you're creating a BACS file, for example, you would have that set up so they're paid on the 19th. But in terms of reporting to HMRC, you would use your usual pay date. Now, if you've ever wondered why, it is all to do with income-based benefits such as universal credit. Now, because a lot of HMRC systems are automated since the introduction of RTI, it does mean that mistimed payments, where there isn't a regular interval between the payments, could potentially affect an employee's claim to universal credit. So if their assessment period happens to include 2 monthly payments, that could potentially stop their benefit, when in fact that second payment might have belonged in their next assessment period. So in order to prevent that issue from occurring, HMRC have brought in this permanent easement. They remind you about it in their employer bulletins. So the latest bulletin from October has a section on that, and we will just give you a very quick demo to explain how you would deal with this. So I'm just going to bring the slides down just a moment. And for this demo, I'm going to work with monthly paid employees. Now, as you can see from my last updated date, they're usually paid on the 25th of the month. And actually looking at the history of one of these employees, you can see I always report the 25th of the month, regardless of whether that falls on a weekend or a bank holiday or whatever. So we need to stick to that pattern and report our regular pay date when we run our December payroll. So all I would need to do when I come to process December is to set the process date, in this case to the 25th of December. I can then go ahead and enter the payments for that month. And then once I've updated the records, it will submit that regular pay date as part of the full payment submission. Now, if you do use Sage e-banking or salary payments to create payment files to your employees, obviously you would set these up with the date they're actually going to be paid. But the rule is just to stick to your regular pay date. So for my monthly payroll here, I would run it on the 25th of December. And once I've updated the records for that period, you can see that that will be recorded as the last updated date. That will show in the employee's history. And when I do my full payment submission, that will also be reported as the pay date. So just something to keep in mind, making sure that you are kind of doing what HMRC would like you to do. So like I say, the link to the employer bulletin is there on the handout. This rule has been in place for several years now. So obviously, if you do need to pay early, that's what you need to do. Now, from paying employees early, I'd like to talk about something similar, but it's not the same. And it's important to understand the difference between these, and that is advancing pay to your employees. Now, advance pay is where you're paying your employees early, but for a future pay period. So it's not just bringing your pay date forward, it's when you're paying them for maybe 2 weeks instead of 1, or 3 weeks instead of 1, perhaps because the business is closed and you want to just give them a lump sum of that number of weeks' wages to cover the period that they will be away. Now, an example of this one is if your company is closing for a week over Christmas and you wanted to pay your weekly staff for 2 weeks instead of 1, you would advance pay on the pay date that they would receive their pay. And then your payroll software will use the allowances for tax and national insurance for both of the periods, so the current period and the advanced period, which means that the employee won't end up paying more tax than they should do. And their national insurance would also be calculated with the correct number of weeks of allowances. So for tax and NI, it's going to use the thresholds and allowances for that full holiday period, rather than a single allowance if you'd put it through as a lump sum. And you can even configure your pay elements, and you can choose which ones you would like to automatically advance if you set this up using global changes. And I'm going to show you how to do that in the demo. So advance pay does have its advantages. Everything would be reported kind of on one pay slip, but there are some scenarios where you shouldn't use advance pay. So just to list these, number one, if you're processing a statutory payment for an employee, you won't be able to advance the statutory payment, as it will only calculate up to the current process date. So in that scenario, you can process separate periods for them, add together the net pay that they should receive, and you could pay that lump sum on the first pay date. You should also avoid advance pay if you have a pension provider that requires a contribution file for every separate period. If you're processing a salary sacrifice pension scheme, or if you think you may have employees receiving income-based benefits such as universal credit, because potentially an advanced payment could affect the way they're assessed for their benefit, and it could cause kind of negative repercussions. So with that in mind, I'd like to give you a demo of using advance pay, should you choose to do this. We'll also show you what you would do if you're processing the periods separately. So we'll just bring these slides down again. And for this demo, I am going to switch to a weekly payroll, because it would be most common to do advance pay for weekly, paying more than 1 week at the same time. And in this example, I'm going to be processing payroll for my 19th of December weekly pay date. But I also want to advance a week's pay for the following week, so that all of that appears on one pay slip and it uses the allowances for both periods. So we'll start by showing you how you do it for an individual employee at the enter payment screen. So I'm just going to select my first employee, and I'm going to go into enter payments. Now they usually get basic pay, 40 hours at their basic hourly rate, which is £19.71 in this example. And because I want to pay for next week's wages as well, I'm going to click this advance pay button at the bottom. And then at the top of the screen, I'm entering the total number of periods I'm advancing. So in this example, it's just 1 extra week. I'm going to pay them for the current period and the next period. And then in the grid below, we enter the details of any payments and deductions that we need to advance. Now notice it hasn't pulled through any values, so I need to know how much I want to pay for the advanced period. So I know it's 40 hours at the usual basic rate for this employee. So I've put that in as the advance pay, and they don't have any deductions, attachments, or loans that I need to deal with. So once I'm happy with what I've entered here, and this should cover the full holiday period, the amount that we're advancing, so just 1 week in this example, you can see at the summary at the bottom, I've now got kind of double gross pay, showing 1 period advanced, and it's showing me the advanced pay amount, which is the same as what we're paying in the current period. If I just switch to the summary tab, you can see in terms of calculations, it separates the advanced pay from the current period. So this is what we're paying in the 2 weeks. You can see it's worked out the pension contribution across those 2 weeks. So that might use weekly thresholds, for example, and it's done the same with the tax and the national insurance. So in terms of their net pay, they're going to receive double what they normally receive. But if I put through all of that payment in a single period, they're likely to have paid more tax and the wrong amount of national insurance. So that's how it can be set up within the enter payment screen. But I also want to show you how you can do this using global changes, because if you use global changes, you can automatically advance some of your payment values as well. So before we do this, I'm going to show you some pay element settings, because within the pay element settings for my basic pay, just here, you can see there's a box at the bottom to auto advance. Now, if we've got this ticked, it means it'll automatically advance the kind of standard amounts or the current amounts for this particular pay element for that employee. So I've got it set up to do this for basic pay, but for things like overtime and commission, notice that I have not ticked the auto advance box. Now to set this up for multiple employees, I'm going to make a selection. So I'm going to select everyone except for Jacqueline, because Jacqueline's actually on maternity leave at the moment. So she will require separate pay runs, even if I'm paying in advance. But for everyone else here, because I've got them selected, I can go to Tasks and Global Changes. I can come down to Advance Pay, and I can choose to advance for a number of periods. So in this case, it's 1 week being paid in advance, and I'm going to base that pay on the default hours and rates set in their record. If I click OK, and then yes to proceed, it's now marked those employees with advance pay. And if I just jump back into enter payments, you can see that it's automatically advanced. This time it has carried forward the kind of default hours and rate. So that's how it can be set up for more than one employee at the same time. Now, just to show you how this appears on reports, take a quick look at the pay slips for you. So I'm just picking out one of the standard layouts. And you should be able to see here, if I just zoom in, it shows the current period's payments on one line here, and then it shows the total of the advance pay as a separate payment line. We've got that for kind of all of the employees that have been set up for advance pay. Now I'm just going to go ahead and update the records for these employees. I'd run through the update records wizard in the usual way. And although the pay date for this one was the 19th of December, you can see that the last updated date reflects the pay date of the advanced period, or the latest advanced period. So in this case, the 26th of December. When I send a full payment submission, it's going to send that information. It will include an indicator that pay has been advanced. And you'll see the last FPS date matches that as well. Now, if for some reason you don't want to use advance pay, maybe one of the reasons we went through on the slide, and a perfect example here is Jacqueline, who's currently on maternity leave. You just can still run separate pay runs. And even if you're doing this in advance, you just run through your full payroll process. And then once you've submitted the FPS for the first period, set your process date forward a week, and then you can complete the exact same steps. So if I go into enter payments for Jacqueline, she's currently getting statutory maternity pay, as we can see here on the summary tab. If we try to advance it, if I enter one period here, there's actually nowhere where I can enter advanced statutory pay. You can see it doesn't automatically advance it. So that's why we can't use it in this example. So I'll set that back to 0. What we'd actually do for this employee, so we would produce all of our reports and we would update the records. We can send a full payment submission for this first period. So that's updated us for the 19th, and we can repeat the same steps for the following pay date. So again, we've got maternity pay for the current period. We can produce our pay slips and we can send a second FPS. So that's just a few different ways you can deal with advance pay. A reminder of when not to use it, just there on the slide. So the big one is statutory payments, pension providers requiring a contribution file for each individual period. Avoid it if you use salary sacrifice pension schemes, and also if you think you may have employees that might be affected on universal credit. But you can read more about the advanced pay option following the link there on the slide. And with that, we're going to bring Sarah back, who's going to finish off with a section on Christmas bonus. So over to you, Sarah.
Thanks so much for that, Duncan. So another very common scenario around Christmas time, and that is bonuses. So now, not everyone gets a bonus. It does really depend on your company policy. But if you do want to award one, here's how to set it up and process it in your payroll. So first, you'll need to create a separate pay element for the bonus. And that's just because bonus can be subject to different rules than regular salary or wages. So keeping them separate just ensures a bit more clarity on the pay slips for the employees as well. Now, typically a bonus is subject to tax and national insurance and included in qualifying earnings. It may also be pensionable, but that does again vary by company and pension provider. So if you're not 100% sure, do make sure to always check with your provider just to make sure you are actually processing it correctly. Now, to set up the bonus pay element, you would be going to your company tasks and into pay elements. You would create a new element for the bonus, you can configure it based on your requirements. So is it taxable, NI-able, pensionable? And once the payment is created, you can then assign it to the relevant employees and then enter their bonus amount when you're processing your enter payments. So I do want to just jump straight into a demo and I'll show you exactly how to do that. So let's just bring the slides down. So first thing I'm going to do is I'm going to go to company just in the bottom left of my payroll and into pay elements. Now you can see I already have a few set up, so basic, overtime, commission, but I'm going to create a new one for my bonus. So I'm going to hit on the new button. And this is where we configure the pay element and tell payroll exactly what it's subject to. So I'm going to give it a simple name. I'm just going to call it bonus. But it's this part which is going to be most important. So it is taxable and NI-able. Bonuses usually will be. But I am going to check with my pension provider just to see if it's included in my pension contributions. So I've got my tax and NI boxes ticked. That's all looking good. It is going to be included in qualifying earnings, which is typical again for bonuses. However, I have spoken to my pension provider. They've confirmed to me that it's not actually going to be pensionable in terms of the contribution. So I'm going to untick these two boxes here. So I'm going to make sure my pension main, AVC and salary sacrifice pension are all unticked. So that's just going to make sure payroll calculates everything correctly. So I'm happy with that. There's no other options I need to configure on that. So I'm just going to press OK. And that's it. You can see my bonus pay element has now been created. So from here, we can assign it to the employees, enter the bonus amount when processing their payments, and it will show as a separate line on their payslip as well. So it'll keep everything really clear for your employees. Now, before I go ahead and assign the bonus pay element, there is another option I want to mention, and that is using a net payment. So a net payment will let you specify a specific net amount to an employee, and Sage 50 Payroll will work backwards to calculate the tax and national insurance needed to reach that amount. So, for example, if you want to give an employee £1,000 net bonus, you'd set up a net pay element, you'd enter £1,000 in the enter payment screen, and then payroll will calculate the gross amount from that along with the tax and NI deductions automatically. So there is a little bit more to the calculation than that. It does really totally depend what other payments and deductions the employee has going on. But I have linked some more detailed guidance in the handout that explains exactly how payroll handles this. So you'll find the link at the bottom of the slide there. But for now, let's jump back to the demo and set up that net pay element. And then we'll assign both to the employees as well. I'm just going to jump back into my payroll, still in my company pay elements, but this time I'm going to switch to the net payments tab. I'm just going to click new, and I'm going to name this one bonus net, just so there is a really clear name and I can distinguish between this one and the normal bonus. Next thing, I need to specify what it's adjusted for. So with net payments, you can choose whether it's adjusted for tax only or both tax and national insurance. So I do want it to be adjusted for both. So I'm going to select that box. But if you're not 100% sure, do make sure to check with HMRC. Now, what this means payroll will work backwards from the net amount to calculate the gross pay and deductions, but I also need to untick the pension options as well, because remember, it's not going to be subject to pension, but it is going to be included in qualifying earnings. And notice the tax and NI boxes are greyed out because we've already specified that earlier. So I'm happy with everything else. I'm just going to click OK. You can see I've now got that net bonus created. So we've got our bonus elements created. Now let's assign it to these employees. So there are a few ways to do this. So you can add them individually in the employee record or in enter payments, or you have the option of global changes as well. So first thing I'm going to do, I'm going to add the net bonus to Merry Christmas. So I'm just going to go into enter payments, Mary, and I'm going to select this add payment option here. I'm going to choose the drop down. You can see we've got my bonus net at the bottom. So I'm going to select that and save. So Mary's actually going to get £1,000 net bonus. So you can see when I type that £1,000 in, it will gross that amount up. And you can see it's calculated the cost of that net payment to the employer as well. Just a quick tip as well. I know we've named our pay elements clearly in this instance, so you can distinguish between them, but you can also check the tax and NI columns as well. So you can see this net one has net in there. So that is quite an easy way to distinguish. So that is my net bonus assigned to Mary. It's grossed it up, and we can see the cost of that net payment to the employer as well. So I'm happy with that. I'm just going to save that. Now what I'm going to do is I'm going to assign the regular bonus to some of the rest of my weekly employees. So I'm just going to deselect Mary there. And I'm going to highlight the weekly employees that will be getting a bonus. So to do that through global changes, I'm going to select everyone, then go to tasks just up at the top, and then just down to global changes. I'm then going to go to payments, and I want to go to add payment. I'm going to choose the regular bonus and just hit OK. So you can see it's confirming I've got 4 of my weekly employees selected. I say yes. And if I check enter payments for everyone now, you can see I've got my net bonus for Mary, but I also have a bonus for my other weekly employees. So I'm just going to enter a couple of those in. then we'll have a little review of the pay slips. So that is my payments entered. Just want to give you a bit of a view of how the pay slips look when you do have a net payment on there. So I'm just going to do my laser pay slips. You can see in here, we have our bonus showing separately on another line. So definitely a good one to help distinguish for the employees. If we look at Mary, we can see her bonus appears a little bit differently. So we do have it on there, but we also have a cost of net payments as well. So that's just a bit of a view of how that would look. So I do want to jump back to the slides before we move on to the last bit of today's webinar. So we've created both a normal bonus and a net bonus, and we've assigned those either to an individual employee or also in bulk with global changes. So we looked at the cost of net payment, so that's the cost to the employer of paying that net amount, which will show the breakdown of tax and NIC. We've then assigned it to our employees, so remember, either in the record or enter payments or through your global changes. Now, the last thing, so once those bonuses are assigned, it would just be a case of processing your payroll as normal. But what I do want to wrap up on is there might be some employees might request to actually sacrifice their bonus straight into a pension scheme. So if an employee has a salary sacrifice scheme, it might be that they want to put their bonus amount straight into that scheme. And that means instead of receiving their bonus as cash, the employee will get it paid directly into their pension pot. Now, there are a couple of important points to keep in mind here. So first, this arrangement must be agreed between the employee and employer before the bonus is paid. So timing is really critical with that one. Once the bonus is processed as salary, it is too late to make that change. And second, remember, when a bonus is sacrificed into a pension, the amount is not taxed and it's not subject to national insurance contributions as well. So if they're going to do that salary sacrifice, it'll be treated as an employer contribution to the pension rather than the employee's salary. So this can be handled a couple different ways in practice. There are two main options. So option one is to not process the bonus payment at all and instead increase the employer pension contribution by the amount of the bonus. And that is the simpler route and avoids a bonus even appearing as salary. And that is the option we'll run through in the demo. Now, the second option, if you do want the bonus payment to show on the pay slip, is to process the bonus as normal, but then increase the employee's salary sacrifice arrangement by the same amount. And bear in mind that is only if the employee has a salary sacrifice agreement in place with the pension. So definitely a couple of ways that you can do it, but let's go back to payroll for one last demo. So I'm going to look at my monthly employees, and it is actually Rudolph that is getting a bonus this period. So they're getting £1,000, but they have requested to put this straight into their salary sacrifice pension. And me as the employer has agreed to this. So I'm going to go into enter payments for Rudolph. And rather than adding a payment and processing the bonus in the payments window, what I'm going to do instead is I'm going to note down what the original contribution would be without the bonus. So I'm going to look at the salary sacrifice amount. So that's £84.70 and note that down. Now I'm going to go and check the employer contribution. So I'm going to need to do £135.52 minus that £84.70. So that gives me a standard contribution of £50.82. So I want to add the £1,000 on that. So what I'm going to do is I'm going to go into the employee record, just in the shortcut in the top left. And I'm going to go into the pensions tab, into manage schemes. And because I'm not processing the payment through the payments window at all, what I can do in their salary sacrifice scheme is I can change this employer contribution to a fixed amount, and I'm going to put £1,050.82 in there. Now, if it is just a one-off, remember to change that back the next time you process payroll. So I'm just going to save Rudolph's record. And if we check the employer contribution now, you can see that is looking a lot higher. And that includes both the employee and employer, including that bonus. So it's just going straight into the pension pot without going through the payments window at all. So that's a little bit about processing the bonus straight into the pension. I know that is quite a common one with salary sacrifice schemes. So that brings us to the end of today's content, but remember there is a couple ways you can do this. I've showed you the easiest way today, so option 1, but both options achieve the same goal, moving the bonus into the pension, but the mechanics of each one just differ slightly. So if you do want more detail and step by step, I have included a link at the bottom of the handout there. So make sure to get those downloaded if you haven't already. So that is it for our festive webinar today. I do want to wrap things up just by running through some further support. So we do have a whole load of upcoming webinars. We have more of the Festive Payroll webinar series. So today was the first. We do have a part 1 and a part 2 and a couple different dates and times for those. So make sure to get signed up for a part 2 as well. We also have a pensions discovery webinar series running. That's until the 17th of December, so still a bit of time to get signed up for that. You want to attend 5 different sessions, plus the pensions quiz, and you can earn your very own badge. Now, I do want to shout out the Help Centre. It is a great resource, so you can access that by clicking on the Help icon in Sage 50 Payroll, just next to your reports. You can get our support guides on there, or recorded webinars, and info on how to get in touch with our support team if you need to. And last but not least, there is Sage University. So you can do anything from bite-sized bits of learning to full certifications. So you can really do it all at your own pace. And best part is it is totally free to set up an account. So get to sageu.com to have a bit of a look about. So with all that said, before we close the webinar down, I will stick around for the next couple of minutes or so just to help Duncan out with any questions that might have came through. If you are leaving us at this point, you will see a short survey. If you do have 2 seconds to fill that out, that is really appreciated. We do love hearing all of your feedback. So with that said, I'll pop on to mute for now, but I will see you all shortly to wrap the session up. Hi again, everyone. I really hope you've all enjoyed today's session. I haven't had any more questions coming through, so we will go ahead and close the session down in the next minute or so. Remember, as you exit, you will see a survey. If you can take a moment to fill that out, your feedback is really valuable to us. We do love hearing what you thought, what worked well, anything that can be improved so we can keep making these sessions better for you. You will also get a follow-up email later today. It will have a link to today's webinar recording on there and information on how to register for future sessions as well. But thanks again from me and Duncan for joining us today. Hopefully we will see you again soon, but it is bye for now.